Australia is on track to be the world's biggest producer of LNG, but it comes amid a fragmenting market and a global glut of gas. Spot LNG prices have almost halved over the past 12 months, with buyers putting pressure on producers to step away from signing long-term contracts. That's seen an Australian online LNG trading platform secure the world's first 30-minute end-to-end short-term sale. I spoke to the founder and CEO of GLX from Perth, Damien Criddle. Damien Criddle, with global demand for LNG increasing, you're not the only company looking to capitalise on new ways of trading. Will your platform succeed in that crowded market?
I would obviously say yes. I think we have, I suppose, been first to market in the online physical LNG space. We've been around now coming up 4 years. So we've built a product over that time based on feedback from our members and industry, which we think is robust and will stand the test of time. So I think being first to market and having a physical presence and a platform that's operational and live is a big advantage. So we're comfortable with where we are in that space.
Now, the traditional way of selling LNG relies heavily on long-term relationships and contacts. Can this style of negotiating really compete with those long-established connections?
I think so. You're correct. Traditionally, LNG has been transacted under long-term contracts, 20 years, 25 years. The market is changing though, and increasingly the transaction times are coming down. So there's still long-term contracts, but the percentage of long-term versus spot trade, which we classify as 3 to 4 months, some commentators forecast that spot will move to 50% of the overall market. So transactions less than 3 months by 2025. So yes, we see there's definitely a place for it, but there needs to be, I suppose, time for the market and the participants to understand your product and then move to new ways of trading.
Let's talk specifically a little bit about your platform. How many trades have you hosted? Who's buying and selling using GLX?
So last year we hosted 7 live trades. This year we've held trades as recently as 2 weeks ago. And excitingly for us, the first trade to be initiated and closed within the trade window on our platform was 2 weeks ago. So an end-to-end transaction from initiation to close, binding in a half-hour trade period, which is something that's not been done before in the industry. So that gave a lot of people an insight into what our platform can do, and in particular the data and analytics and price discovery it can bring.
Global LNG prices have been edging lower, mostly because of increased supply hitting the market. So what impact will new trading methods such as yours have on LNG pricing?
So I think one of the side effects of our platform in terms of its online execution and real-time execution is more data. So currently there is no established benchmark price for LNG. There's no, you can't pick up a paper and say today that is the price in this market or that market. So platforms can, I suppose, shine a light on what is a pretty much opaque market at the moment, to give, as the market fragments and more participants come into it, give them an opportunity to play on a more level playing field. I think with what we're doing, there's a lot of people who support it. There's some people who are not as supportive because they are quite happy with opaque markets. But we think that if you look at other commodities and other markets, they all move eventually to transparency. It's just a natural outcome of liquidity and commoditisation, which is where LNG is moving.
Damien Criddle, thanks for speaking to The Business.
Thank you very much.